Let's be honest. AI is all anyone is talking about right now. But for all the excitement, there's this deep-seated fear that it's all just one giant bubble about to pop. Well, in this explainer, we're going to break down why that fear, by itself, might be the single biggest risk to your money. You've heard this a million times, right? It's all over the news, it's in every group chat. It's that spooky ghost of 1999. And man, it's a powerful story that really gets in your head. And then there's this classic. The four-word headline designed to make you want to sell every single thing you own and go hide in a bunker. It's pure, uncut panic fuel. Yeah, it probably does. So let's just take a breath and cut through all that noise. Welcome to Paycheck Paradox, by the way, where we unpack this kind of stuff. If you like what you see, hit that subscribe button. It really helps us out. And everything we talk about here, you can find in more detail on our blog at paycheckparadox.com. And we also have a podcast if you prefer to listen on the go. Now, the super quick but super important disclaimer. None of this is financial advice, okay? This is all for your education and hopefully a little bit of entertainment. All right, let's dive in. So here's the paradox, the thing that most people totally miss. Spotting a potential bubble, that's actually the easy part. We can all see prices are going kind of nuts. The hard part is knowing when it's going to end. But here's the real kicker. If you refuse to even go to the party because you're scared of the hangover, you are guaranteeing you miss out on potentially life-changing wealth. Okay, so the very first thing we have to do is just demolish this lazy comparison. Just saying, oh, this is exactly like 1999, it's not real analysis. The fundamentals today are completely, and I mean radically different from the dot-com era. Just look at this breakdown. It's night and day. Back in '99, you had the hope bubble. People were throwing millions at companies like Pets.com. You remember the sock puppet? A company with basically zero revenue, whose whole strategy was to burn cash on Super Bowl ads. Their big metric for success? Eyeballs. How many people saw their website? Today, we have a profit bubble. The companies leading the charge are absolute titans like Nvidia and Microsoft. These guys are sitting on fortresses of cash and are generating billions in actual free cash flow. They're not selling you a dream, they're selling the core infrastructure of the future. And this right here, this just hits the nail on the head. The big players today aren't the guys hoping to find a speck of gold. No way. They're the ones selling the picks and shovels to every single gold miner in the rush. They're building the literal railroad tracks that this entire technological revolution is going to run on. It's a completely different game. So this brings us to a really critical fork in the road. If you want to navigate this whole thing successfully, you have to ask the right questions. And I'm telling you, most investors are asking the wrong one, and it's costing them big time. This is the one. This is the question everyone asks. But you know what? It's a trap. It's a simple yes or no question that pushes you into a corner. It makes you think there are only two options: go all in or sell everything and run for the hills. It completely removes any room for strategy. Now, this is a much smarter and, frankly, a much more profitable question. It acknowledges, yeah, okay, things might be bubbly, but it frames it as a process, right? A cycle that has different stages. And if you can figure out what stage we're in, you can act strategically instead of just reacting emotionally. So, a classic bubble has about 5 stages. It starts with some big new thing, a displacement. Then you get the boom, where prices start to climb. Then comes the most profitable and also the most dangerous part, euphoria or the melt-up. After that, the smart money starts cashing out, which leads to profit-taking, and finally, panic. The whole point is, we could easily just be in the boom phase right now, not teetering on the edge of a cliff. And get this is so important. That last crazy, everybody's got FOMO, euphoric melt-up phase, that's where a huge chunk of the gains in the entire cycle are often made. If you get out too early because you're scared, you miss the most powerful part of the entire move up. You want proof? Just look at 1999. In that 1 year, the absolute peak of the dot-com craziness, the Nasdaq went up 85%. Think about that. If you sold out in '98 thinking, oh, this is way too overvalued, you missed one of the greatest single years of returns in modern history. That is the real cost of being scared too soon. So how do you do it? How do you stay in the game without getting completely wiped out when it ends? Well, you need a plan. You need rules that let you dance near the exit, right? Enjoy the party, but you know exactly where the door is and how you're going to get out. It's about using your head, not your gut. And here it is, a simple 3-step playbook. 1, you ride the trend, for sure, but you have a parachute, like an automatic sell order if things drop. 2, you watch the real data, not the scary headlines. And 3, you're smart about how much you're betting. Okay, let's zoom in on that second step, because it's the most important. Instead of freaking out over some article, You watch the actual numbers. Are the companies spending billions on AI chips actually making more profit because of it? Is their earnings growth actually keeping up with their stock price? The huge flashing red light is when earnings growth starts to slow down, but the stock price just keeps going vertical. That gap tells you things are getting disconnected from reality. All right, let's bring it all home. We have to change the way we think about risk. In the middle of a massive technological shift, playing it safe by just doing nothing, well, it isn't safe at all. Sitting on the sidelines has a very real cost. We call it the fear tax. It's the price you pay, the opportunity you lose by sitting in cash while something huge is happening. If you're happily making 4% in a savings account while the engine of the entire economy is growing at 40%, you're not playing it safe. You are actively falling behind. You're trading a chance at wealth for the illusion of safety. So what's the big takeaway here? This whole AI revolution is happening, whether we like it or not. Maybe it's a bubble, maybe it's just the beginning. But wealth is rarely built by the spectators in the stands, guessing the final score. It's built by the players on the field who manage their risk, stick to a plan, and stay in the game. Don't let the fear of what might happen stop you from being a part of what is happening. Thanks so much for watching this explainer from Paycheck Paradox, and we'll see you for the next one.